ExamPrep.School. Virginia Personal Lines Insurance Exam, exam code SERIES 11-7. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, dwelling policy, general insurance, homeowner's policy, insurance regulation, other coverages and options, property and casualty insurance basics. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Virginia law, what is the minimum number of pre-licensing education hours required for a resident producer seeking a life and health insurance license? A. 24 hours. B. 20 hours. C. 30 hours. D. 40 hours. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The Code of Virginia requires resident life and health producer applicants to complete at least 20 hours of approved pre-licensing education. Reason A is not correct. That number exceeds the statutory minimum for life and health pre-licensing in Virginia. Reason C is not correct. This amount is more than the required hours for a life and health license. Reason D is not correct. 40 hours is the requirement for a different line of authority, not life and health. Question 2. Under Virginia's reciprocity provisions, within how many days after becoming a resident must a non-resident producer submit a license application to the State Corporation Commission? A. 60 days. B. 90 days. C. 30 days. D. 120 days. The correct answer is B. Virginia requires non-resident producers who change residency to submit a license application within 90 days of establishing residence for reciprocity. Reason A is not correct. 60 days is shorter than the statutory window allowed by Virginia reciprocity rules. Reason C is not correct. 30 days is insufficient according to the Code of Virginia's reciprocity timeframe. Reason D is not correct. 120 days exceeds the maximum period provided under reciprocity provisions. Question 3. A Virginia temporary insurance producer license is valid for a maximum of how many days from the date of issuance? A. 90 days. B. 180 days. C. 120 days. D. 365 days. The correct answer is B. Under Virginia regulations, a temporary producer license may not exceed 180 days and cannot be renewed beyond that period. Reason A is not correct. 90 days is shorter than the maximum duration allowed under Virginia's regulations. Reason C is not correct. 120 days does not reach the full statutory term permitted. Reason D is not correct. 365 days exceeds the maximum period for temporary licensing in Virginia. Question 4. Which of the following is required before a Virginia business entity may be licensed as an insurance producer? A. Designation of a licensed individual as responsible producer. B. Filing a $100,000 surety bond. C. Approval of an errors and omissions policy. D. Completion of 20 hours of entity-level education. The correct answer is A. Virginia statutes mandate that a business entity designate at least one licensed individual producer to act as the responsible producer before entity licensure. Reason B is not correct. A surety bond is not a prerequisite for business entity producer licensure in Virginia. Reason C is not correct. Errors and omissions coverage is recommended, but not a condition for entity licensure. Reason D is not correct. No pre-licensing education requirement exists at the entity level in Virginia. Question 5. After appointing a producer, within how many days must an insurer file the appointment with the Virginia State Corporation Commission? A. 30 days. B. 15 days. C. 45 days. D. 60 days. The correct answer is A. Virginia law requires insurers to file the appointment of a producer with the commission within 30 days of the effective date of the appointment. Reason B is not correct. 15 days is shorter than the statutory window for appointment filing. Reason C is not correct. 45 days exceeds the maximum period allowed by Virginia law. Reason D is not correct. 60 days is not the time frame prescribed for filing an appointment. Question 6. Under Virginia regulations, within how many days after terminating a producer appointment must an insurer notify the State Corporation Commission? A. 30 days. B. 10 days. C. 90 days. D. 60 days. The correct answer is A. Virginia statutes require insurers to notify the commission of any termination of a producer appointment within 30 days of the termination date. Reason B is not correct. 10 days is shorter than the period specified in Virginia law for termination notices. Reason C is not correct. 90 days greatly exceeds the statutory reporting window. Reason D is not correct. 60 days is not the time frame set by the Code of Virginia. Question 7. Jordan holds a Virginia property and casualty license and a title insurance license. By the end of the current 2-year continuing education reporting period, how many total CE credit hours must Jordan complete to renew both licenses? A. 24 total hours. B. 30 total hours. C. 28 total hours. D. 32 total hours. The correct answer is C. The correct answer is 28 total credit hours. Virginia requires 24 hours of CE for property and casualty license and an additional 4 hours for title insurance for a combined total of 28 hours. Reason A is not correct. This reflects only the property and casualty requirement and omits the separate title insurance requirement. Reason B is not correct. This overstates the total by adding 6 title hours instead of the 4 hours required. Reason D is not correct. This erroneously assumes 8 title hours rather than the 4 hours required for title insurance. Question 8. During the final year of her 2-year CE cycle, Kim completed 30 continuing education hours, 6 hours beyond the 24-hour requirement, and plans to take an online CE course from a national provider not yet approved in Virginia. Under Virginia rules, how many hours can Kim carry over to the next cycle, and what approval is required for her planned online course? A. 0 hours carryover. Course must be approved within 30 days after completion. B. 12 hours carryover. Course must be approved by any state department before completion. C. 6 hours carryover. Course does not require approval if offered by an accredited national provider. D. 6 hours carryover. Course must be approved by the commission before being offered. The correct answer is D. The correct answer is that Kim may carry over the 6 excess hours from her cycle, and any online CE course offered to Virginia licensees must have prior approval by the Virginia Bureau of Insurance, the commission, before being offered. Reason A is not correct. Unused hours can be carried over up to the amount of excess completed, and approval must occur before offering, not after completion. Reason B is not correct. Virginia limits carryover to unused hours up to the excess completed, not a fixed 12, and course approval is by the insurance regulator, not any department. Reason C is not correct. Even accredited national providers must obtain state approval before offering courses to Virginia licensees. Question 9. Which of the following best illustrates the unlawful practice of rebating under Virginia insurance law? A. providing all insureds a 5% reduction in premiums uniformly. B. Offering premium financing plans approved in the policy. C. Distributing promotional umbrellas bearing the insurer's logo. D. Returning part of an agent's commission to the insured to secure a sale. The correct answer is D. The correct answer is returning a portion of commission to the insured, which constitutes an unauthorized rebate of premiums. Reason A is not correct. Offering uniform premium reductions to all insureds is a standard underwriting discount, not specific inducement. Reason B is not correct. Offering financing terms approved in the policy is an authorized payment option, not a rebate. Reason C is not correct. Giving logo-branded items of nominal value is a permissible promotional expense when not tied to purchase. Question 10. Under Virginia regulations, which of the following constitutes an illegal inducement by an insurer or producer? A. Offering a coffee mug with the insurer's logo valued at $15. B. Distributing informational policy brochures at no cost. C. Giving a $100 gift card to a prospective insured for purchasing a policy. D. Sending a thank you letter after policy issuance. The correct answer is C. The correct answer is offering a high-value gift card as an inducement, which exceeds nominal promotional limits and is prohibited. Reason A is not correct. Giving low-value promotional items below the permitted threshold is allowed. Reason B is not correct. Providing policy brochures is an educational material, not a prohibited inducement. Reason D is not correct. Thank you letters are customary business correspondence, not inducements of value. Question 11. Which advertising practice would be considered a misrepresentation of policy terms under Virginia law? A. Comparing competitor premiums without explaining coverage differences. B. Using nonspecific language about comprehensive protection without detail. C. Advertising a policy type that the insurer does not actually offer in the state. D. Claiming flood damage is covered under a standard homeowner policy. The correct answer is D. The correct answer is stating that flood damage is covered under a standard homeowner policy when it is explicitly excluded, which is a misrepresentation of terms. Reason A is not correct. Comparing rates without details is an omission issue, not a specific misstatement of terms. Reason B is not correct. Vague marketing language may be misleading but does not specify incorrect policy terms. Reason C is not correct. Advertising unavailable products is deceptive, but it misstates availability rather than coverage provisions. Question 12. Which action violates prohibitions against defamation under Virginia insurance statutes? A. Publishing a false statement that a competing insurer is insolvent. B. Asserting without proof that a rival insurer's agents routinely commit fraud. C. Accurately quoting a competitor's loss ratio from public filings. D. Expressing an opinion that another insurer's rates are higher. The correct answer is A. The correct answer is publishing an untrue statement about insolvency, which defames the competitor under insurance law. Reason B is not correct. Allegations without evidence could be defamatory but must be false. Routine fraud claims are reputational, not financial statements. Reason C is not correct. Accurate quoting from public records does not defame or mislead. Reason D is not correct. Expressing a rate opinion is permissible commentary, not defamation. Question 13. Which of the following illustrates an illegal boycott under Virginia insurance regulations? A. An insurer requires prior approval for all water damage claims. B. An insurer threatens policy cancellation if the insured fails to use a company-recommended attorney. C. A group of insurers agrees not to renew policies of any insured who uses a certain auto body shop. D. An insurer advertises lower premiums for homes built to specific standards. The correct answer is C. The correct answer is an agreement among insurers to refuse renewals for certain insureds, constituting an illegal boycott. Reason A is not correct. Requiring claim approval is a policy condition, not a boycott. Reason B is not correct. Threatening cancellation for not using a recommended service is coercion, not a collective boycott. Reason D is not correct. Offering discounted rates for certain construction standards is a legitimate underwriting practice. Question 14. An agent persuades a policyholder to repeatedly replace her auto insurance solely to earn higher commissions, without assessing whether the new policies offer any added benefits. Which practice does this scenario illustrate? A. Twisting. B. Churning. C. Rebating. D. Misrepresentation. The correct answer is B. This option is correct because churning involves replacing policies repeatedly to generate commissions without evaluating the insured's best interests. Reason A is not correct. This option is wrong because twisting involves misrepresenting policy benefits, not simply replacing policies for commission. Reason C is not correct. This option is wrong because rebating is offering unauthorized monetary or other inducements, not replacing policies for commission. Reason D is not correct. This option is wrong because misrepresentation is making false statements about policy terms, not repeated replacements for commissions. Question 15. Under Virginia law, when recommending replacement of a personal auto policy, which disclosure must a personal lines agent provide at or before the time of application? A. A written comparison of premiums, deductibles, and coverage benefits between the existing and proposed policies. B. A copy of the replacement policy within 30 days after its effective date. C. A statement of all commissions or incentives received for facilitating the replacement. D. An oral summary of the advantages of the new policy over the current one. The correct answer is A. This option is correct because Virginia law requires a written disclosure comparing cost, coverage, and terms before replacing a personal lines policy. Reason B is not correct. This option is wrong because there is no requirement to deliver the full replacement policy within 30 days of its effective date. Reason C is not correct. This option is wrong because personal lines replacements do not require commission disclosure to the insured. Reason D is not correct. This option is wrong because an oral summary is insufficient. The comparison must be in writing. Question 16. Under the Virginia Insurance Code, which enforcement action may the State Corporation Commission take against an insurer that violates state insurance regulations? A. Declare all policies issued by the insurer void. B. Initiate criminal proceedings against company officers. C. Impose civil monetary penalties per violation. D. Refer the matter for a federal class action lawsuit. The correct answer is C. The State Corporation Commission has statutory authority to levy civil monetary penalties against insurers for violations of Virginia insurance laws, up to specified amounts per violation. Criminal prosecutions are handled by the Attorney General, policy validity is determined by courts, and federal class actions are outside SCC jurisdiction. Reason A is not correct. Voidance of policies is a judicial remedy, not an administrative enforcement power of the Commission. Reason B is not correct. Criminal prosecutions are the responsibility of the Attorney General, not the Commission. Reason D is not correct. Federal class action lawsuits are outside the scope of the Commission's enforcement authority. Question 17. Which of the following actions by an insurance producer is a statutory ground for revoking the producer's license in Virginia? A. Advertising insurance services without SCC approval. B. Failing to disclose a minor traffic violation. C. Misappropriating client premium funds. D. Maintaining an inadequate errors and omissions policy. The correct answer is C. Under Virginia law, misappropriation of premium or other client funds by a producer is explicitly listed as a ground for license revocation. The other actions are regulatory concerns but do not meet the statutory threshold for revoking a producer license. Reason A is not correct. Unapproved advertising may violate marketing rules but does not automatically trigger revocation. Reason B is not correct. Minor traffic violations are not statutory grounds for producer license revocation. Reason D is not correct. Errors in emissions policy requirements relate to producer qualifications, not direct grounds for revocation. Question 18. When the State Corporation Commission requests records from an insurance producer during an investigation, within how many days must the producer provide the requested materials under Virginia regulations? A. 5 business days. B. 10 calendar days. C. 15 business days. D. 30 calendar days. The correct answer is C. Virginia regulations require a producer to furnish requested records to the State Corporation Commission within 15 business days of the request. Shorter or longer timeframes are not prescribed in the governing statutes. Reason A is not correct. 5 business days is too short and not specified in the regulations. Reason B is not correct. 10 calendar days is not the statutory requirement. Reason D is not correct. 30 calendar days exceeds the maximum period set by the Commission's rules. Question 19. After undercover investigations, the State Insurance Commissioner determines that an insurer has repeatedly misrepresented policy benefits in marketing materials. The Commissioner plans to issue a cease and desist order. Under Virginia law, what criterion must the Commissioner satisfy before issuing such an order? A. A finding that the insurer failed to comply with relevant federal insurance regulations. B. Evidence that the insurer negligently misrepresented policy terms without intent. C. Proof that the insurer committed a criminal act in connection with policy sales. D. Reasonable cause to believe an unfair trade practice occurred and that its continuation would harm the public interest. The correct answer is D. Before issuing a cease and desist order, the Commissioner must reasonably believe that the insurer engaged in an unfair trade practice and that continued conduct would threaten public welfare. Reason A is not correct. Federal noncompliance is outside the standard for state cease and desist orders. Reason B is not correct. Issuance does not hinge on mere negligence. It requires belief in an unfair trade practice. Reason C is not correct. Criminal proof is not required for a cease and desist order against unfair trade practices. Question 20. A Virginia insurance producer's license has been suspended by the Commissioner after allegations of improper inducements. The licensee receives the suspension order and wishes to contest it. According to Virginia regulations, within what time frame must the licensee submit a written request for a hearing to preserve appeal rights? A. Within 10 days of the order date. B. Within 30 days of receipt of the order. C. Within 45 days from the date of suspension. D. Within 60 days after notice delivery. The correct answer is B. Under Virginia law, a licensee must file a written hearing request with the Commissioner within 30 days of receiving a suspension order to maintain the right to appeal. Reason A is not correct. 10 days is shorter than the statutory 30-day period and would forfeit appeal rights. Reason C is not correct. 45 days exceeds the allotted 30-day time frame required by regulation. Reason D is not correct. 60 days is beyond the maximum period and would render the request untimely. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.